and specifically, you're seeing a potential breakdown of some of the more defensive sectors, namely staples and REITs. Walk us through what you're seeing in the charts.
So actually, it's the opposite. We're seeing breakdown in some of the cyclical sectors. So industrials, which are actually hitting 2.5-year relative lows to the S&P, and financials are at a pretty vulnerable state here as well with their relative strength. Basically just right at the lowest level of the year. So any further weakness in financials and also in the home builders, which are also very cyclical. So we're seeing some relative weakness there, and then we're actually seeing some relative strength in some of the defensive areas, consumer staples and the REITs.
Right, and so that's what I was talking about, the potential near-term breakouts in some of the more defensive sectors like staples and REITs. So can you walk us through the charts here? We're showing the chart of staples right now, Jonathan.
Yeah, so this is one of the worst performing sectors of the year going back a couple weeks ago. It's starting to stabilize. We've seen interest rates pull back, which is helping them. So we think consumer staples are actually a good place to hide here to kind of ride out some of the volatility here. So names like Procter & Gamble, SL Green in the REIT space, some of these defensive areas we think are pretty attractive here, given that we're seeing money come out of some of the more cyclical areas.
Let's show the REITs chart, Jonathan, and if you could walk us through exactly what you're seeing, walk us through the lines and how you get to your conclusion that we're on the verge of a breakout.
Well, yeah, so the REITs, if we're looking at the RMZ index, really was in a very narrow range for most of 2017. It broke down below that as we entered this year, and now we're back above that. So the fact that you had a pretty meaningful support level that was breached, and now you're able to reclaim what was resistance, I think that's very powerful for the REIT index. So we think the RMZ, probably gets back up towards the 1200 area, which was resistance, again, part of last year.
Taking a look at this REIT chart, Jonathan, the 200-day moving average seems to be sloping in the past couple months or so, and I'm wondering, does that matter much to you, that it looks like the momentum may be slowing down? And I ask that to you because we're talking today about the S&P 500, for instance, breaching its 50-day moving average, the Dow breaching its 200-day moving average. Doesn't it matter the slope of these moving averages?
Well, usually what's important with the slope of the moving average, you want to trade in the direction of the slope. So generally, we have, if you're talking about the S&P, it's pulling back to a rising 50-day moving average. Generally speaking, that's a good area that you'll try to find some support. So if we're going back to the REITs, the first test of the declining 200-day moving average was a few weeks ago. We saw a consolidation, but now it's actually above the 200-day moving average, and we're starting to see the slope of that turn up. So that's a positive sign for the REITs. But as far as the broad indices, again, most of the long-term primary moving averages are still rising, so that's why we're not getting too cautious here. We just think it's more of an internal rotation out of some of the offensive sectors into defensive, and then that'll probably reset itself as we head into the third quarter.
I want to zero in on some of the financials. You mentioned a potential breakdown in the sector overall. You've got actually concerns about two names in particular, Citi and Goldman Sachs. Can you walk us through those charts, Jonathan?
Yes, I mean, this is nothing new, right? I mean, Citi and Goldman have been kind of relative laggards for a while now. They've been walking through some weakness, and we think there's a bit more downside, maybe 5 to 10% in these names.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.